Good day, everyone. My name is Nicoya Ningito, and I will now be reporting job order costing. So, cost accounting system measures, records, and report product cost. So, managers use this product cost para mabalaan ang presyo sa laang mga products and also to develop financial statements. So, there are two types of accounting system. So first is job order cost system, and next one is the process cost system. So kaning process cost system, this provides the product cost of each manufacturing department or process. So these examples of process cost system includes the oil refineries, paper producers, chemical processors, and food processors. So we'll not dig deeper in this type of cost system since it will be reported by the next quarters. So we'll focus on the job order cost system. So this provides product cost for each quantity of product manufactured. So each quantity of product that is manufactured is called a job. And then job order cost systems are often used by companies that manufacture custom products for customers or batches of similar products. So let's take, for example, the Paul Stanley's guitar. So Paul Stanley is the member of the legendary band Kiss. And then sila yung mga custom-made guitar built by Washburn Guitars. So manufacturers that uses this job order cost system are sometimes called the job shops. So this figure shows the summary of the Legend Guitars manufacturing operations. We need to be familiar with this type of uh, details kay on the later part of our lessons kay manggawas po siya. So it's maya na ma-familiarize na ito ang uban. So sa manufacturing operations na ang cutting and assembling. And then for the product cost, we have the direct materials. So these materials that is an integral part and a significant portion of the total cost of the product. So the next one, we have direct labor. This includes the cost of employees' wages. And then for the factory overhead, these are the costs other than the direct materials and direct labor that are incurred in the manufacturing process. So mag-include ng cost of guitar strings, glue, sandpaper, and other else. So for the inventories, we have the materials. This includes the cost of the direct and indirect materials used to produce the guitar. So the work in process, muna ang nagtrabaho pa, nawa pa na kompleto. For example, the product cost of guitars for which the neck have been cut but not yet assembled. And lastly, we have the finished good. Muna niya ang nahuman na atong product. Pero wala pa siya nabaligya. So in this figure, this shows the flow of manufacturing cost. So from the materials inventory, they are stored in the materials storeroom. And then after that, nagkitrabaho na sila sa work in process. They are included in the job number 71 and 72. So nagpart na sila sa work in process inventory. After that, nahuman na ang ilang trabaho. So ang naarang job number 69 and job 70, na siya ang finished good inventory. So after that, gibaligyan natin ang mga guitar sa mga music stores. Ang cost ato kay na part na din siya sa cost of goods sold. So sa job order cost accounting system, so controlling accounts are maintained for materials like sa work in process and sa finished goods inventories as shown in your screens. Lahi siya. So in the next figure, this shows the materials information and cost flows. So this shows the Legend Guitars ledger account for Maple. So makita nato na ang received na po lang issued. So debits are based on the receiving reports such as 196. These are supported by the supplier invoice. And then sa issued na po nato, which are based on the materials requisition, na po na nga to ang info nato nakabutang sa requisition number 704 and requisition number 672. So ang material requisition nato na mga details of yun sa pagkuha ang 2,000 and 11,000. So after that, we have this receiving report. So what is a receiving report? A receiving report is prepared when materials that have been ordered are received and inspected. So the quantity received and the conditions of the materials are entered on the receiving report. And then when the supplier invoice is received, is compared to this receiving report. In case gani na wala discrepancies sa duha, a journal entry is made to record the purchase.
Hello everyone, my name is Joe Baroa and I'll be presenting factory labor. When employees report for work, they may use electronic badges, clock cards, or in and out cards to clock in. But when employees work on an individual job, they use time tickets to record the amount of time they have worked on a specific job. The image here illustrates time tickets for jobs 71 and 72. So on the left side, it shows that on December 13, 2016, the machinist spent 6 hours working on job 71 at an hourly rate of $10 for a total cost of $60. We got $60 by multiplying the total hours, which is 6, and the hourly rate. The image also below indicates that a total of 350 hours was spent by employees on job 71 for the month of December, for a total cost of $3,500. We got $3,500 by getting the product of the number of hours for December and the hourly rate. On the right side, it shows that S. Andrews on December 26, 2016 spent 8 hours on job 72 at an hourly rate of $15 for a total cost of $120. So that is 8 times 15 is equals 120. And for the month of December, the employee's total hours for job 72 is 500, with a total cost of 7,500. So we got 7,500 by getting the product of the total number of hours and the hourly rate. Now, the total direct labor cost is posted to the job cost sheets. This one for job 72 and 71. as shown here below. A summary of the time tickets is used as the basis for the journal entry recording direct labor for the month. This entry increases debits work in process and increases credits wages payable here, as you can see in the image below. So we got $11,000 by adding the total labor cost for job 71, which is 3,500, and job 72, which is 7,500. Example exercise. During March, Hatch Company accumulated 800 hours of direct labor costs on job 101 and 600 hours on job 102. The total direct labor was incurred at a rate of $16 per direct labor hour for job 101 and $12 per direct labor hour for job 102. Journalize the entry to record the flow of labor costs in production during March. In order to journalize the entry, we should get first the total direct labor cost for each job. So first, for job 101, the accumulated hours is 800. We multiply that to the rate, the hourly rate, which is 16. And the product of 816 will be 12,800. Now for job 102, the total hours is 600 with an hourly rate of $12 equals 7,200. So the total direct labor cost will be $20,000. So if we journalize the entry, it will be the work in process will be at 20,000 and the wages payable at the credit side will be 20,000. So that's how you journalize the entry. My next topic will be factory overhead. Now, factory overhead includes all manufacturing costs except direct materials and direct labor. Factory overhead costs come from a variety of sources, including the following. Number one, indirect materials comes from a summary of materials requisitions. So example of these are if we work in a factory, we use the zippers or the line where we sew the jeans that we make. Those are the example of indirect materials. Next is the indirect labor that comes from the salaries of production supervisors and the wages of other employees such as janitors. So these individuals will be the workers of a facility but are not directly involved in the production of such product. Another is the utility bills that the factory incur. And the factory depreciation comes from accounting department computations of depreciation. Factory depreciation, example of these are the machines that they use in the factories that would lose value over time because of wear and tear. To illustrate the recording of factory overhead, assume that Legend Guitars incurred $4,600 of overhead during December here, which included $500 of indirect materials, $2,000 of indirect labor, $900 of utilities, and $1,200 of factory depreciation. The $500 of indirect materials consisted of $200 of glue and $300 of sandpaper. So the total of this will be $4,600, which will be the factory overhead. Example exercise. During March, Hatch Company incurred factory overhead costs as follows: indirect materials at $800, indirect labor at $3,400, utilities cost at $1,600, and factory depreciation at $2,500. So we have to journalize the entry to record the factory overhead incurred during March. So what we do is we first add up all of the costs, which are number one, the materials, the wages payable, the utilities payable, and the accumulated depreciation of the factory. So the materials will be $800. Wages payable at $3,400. Utilities payable at $1,600. And the accumulated depreciation at $2,500. If we total this will be $8,300. So that will be the factory overhead, which will be at the debit side. So that's how we journalize the entry. My next topic will be allocating factory overhead. Now, factory overhead is different from direct labor and direct materials, and in that it is indirectly related to the jobs. We all know that direct materials and direct labor can easily be traced. That is, factory overhead costs cannot be identified with or traced to specific jobs. So the factory overhead, which consists of indirect labor, such as wages of janitors, indirect materials, the small materials that you use in producing, like threads or zippers, utilities, such as electricity, and maintenance, or the factory depreciation of machines. So these cannot be traced easily. Now, for this reason, factory overhead costs are allocated to jobs. The process by which factory overhead or other costs are assigned to a cost object, such as a job, is called cost allocation. Now, for example, when there is a certain product, now when we produce a certain product, say a jeans, we know that electricity or electric is involved in producing one, but we don't know how much. Now, in summertime, we do know that electricity will shoot up. So rather than getting the actual cost applied to the product, we will gonna estimate. So that is where cost allocation comes in. Now the bigger picture is to take the factory overhead and apply it to a certain product through some method or activity. So the factory overhead costs are allocated to jobs using a common measure related to each job. This measure is called an activity base. The activity base used to allocate overhead should reflect the consumption or use of factory overhead costs. Now we use activity base because it is impossible or difficult to trace overhead costs to a particular job. Another is manufacturing overhead consists of many different items, ranging from the grease used in machines to the production manager's salary. And many types of manufacturing overhead costs are fixed even throughout output fluctuates during the period. So this activity base is what drives the cost. So the three common activities bases used to allocate factory overhead costs are the following. First is the direct labor hours. Second is the direct labor cost. And the machine hours. So these are what drives the activity base or allocation base or activity driver. Next is we get the predetermined factory overhead rate. Now the factory overhead costs are normally allocated or applied to jobs using a predetermined factory overhead rate. Now since we can't use the actual cost, we use the overhead instead. The predetermined factory overhead rate is computed as follows. Predetermined factory overhead rate is equals to estimated total factory overhead costs for the coming period and divided to the estimated activity base. Now the activity base is what drives the cost. As I've mentioned, these are direct labor cost, direct labor hours, and the machine hours. To illustrate, assume that Legend Guitars estimates the total factory overhead cost as $50,000 for the year and the activity base as 10,000 direct labor hours. The predetermined factory overhead rate of $5 per direct labor is computed as follows. So the predetermined factory overhead rate is equals to the overhead cost, which is $50,000, divided by the activity base, which is 10,000 hours, equals to the predetermined factory overhead rate of $5 per direct labor hour. So as illustrated, the predetermined overhead rate is computed using estimated amounts at the beginning of the period. This is because managers need timely information on the product cost of each job. If a company waited until all overhead costs were known at the end of the period, the allocated factory overhead would be accurate but not timely. Only through timely reporting can managers adjust manufacturing methods or product pricing. Next is applying factory overhead to work in process. Now, Legend Guitars applies factory overhead using a rate of $5 per direct labor hour. We determined this through the predetermined factory overhead rate formula that we have made earlier. Now, the factory overhead applied to each job is recorded in the job cost sheet as shown. In the image, it shows that 850 direct labor hours were used in Legend Guitars December operations. So, 350 plus 500. So, based on the time tickets, 350 hours can be traced in job 71 and 500 hours can be traced to job 72. Using a factory overhead rate of $5. For a total of $4,250. So the $4,250 of factory overhead is applied as follows. So for job 71, the direct labor hours will be 350. The factory overhead rate is at $5. So the factory overhead applied will be $1,750. We got $1,750 by multiplying the direct labor hours and the factory overhead rate. Now for job 72, direct labor hours is 500. Factory overhead rate is $5 as well. We multiply them and it gives us $2,500 with a total of $4,250. So the applied overhead is posted to each job cost sheet. Now the journal entry to apply factory overhead increases or debits work in process and credits factory overhead. So this journal entry to apply overhead to jobs 71 and 72 is as follows. So the work in process is at the debit side at $4,250, while the factory overhead is at the credit side at $4,050 as well. This is according to the predetermined overhead rate of $5, multiplying it to the direct labor hours. Example exercise. Hatch Company estimates that total factory overhead cost will be $100,000 for the year. Direct labor hours are estimated to be 25,000. For Hatch Company, determine the predetermined factory overhead rate using direct labor hours as the activity base. Letter B, determine the amount of factory overhead applied to jobs 101 and 102 in March, using the data on direct labor hours from example exercise 2-2. And letter C, prepare the journal entry to apply factory overhead to both jobs in March according to the predetermined overhead rate. So what we do is, we first get A. For letter A, we determine the predetermined factory overhead rate, which is the predetermined factory overhead rate is equals to the factory overhead cost, which is $100,000 divided by the direct labor hours, which is 25,000 hours, which will give us $4 per direct labor hour. For letter B, we determine the amount of factory overhead applied to jobs 101 and 102 in March, using the data on direct labor hours from example exercise 2-2. So, in exercise 2-2 for job 101, the total hours are 800. And for job 102, total hours is 600. We multiply both to the predetermined factory overhead rate of $4, which will give us, for job 101, $3,200, and for job 102, $2,400, total of $5,600. Now we prepare the journal entry to apply factory overhead to both jobs in March according to the predetermined overhead rate. So we put work in process in the journal at the debit side at 5,600 and the factory overhead, the credit side, at 5,600.
Ladies and gentlemen, good evening. Now let's talk about the work in process in relation to the order costing topic. The work in process during this period is increased or debited for the following: direct materials cost, the direct labor cost, and the applied factory overhead cost. To illustrate, the work in process account for Legend guitars is shown in Exhibit 7. The balance of work in process on December 1, 2016, or the beginning balance, was $3,000. As shown in Exhibit 7, this balance relates to Job 71, which was the only job in process on this date. During December, work in process was debited for the following: direct materials cost of $13,000, transaction B, based on materials requisition, and the direct labor cost of $11,000 for transaction C, based on time tickets. Applied factory overhead of $4,250 for transaction E, based on the predetermined overhead rate of $5 per direct labor hour. The preceding work-in-process debits are supported by the detailed postings to job cost sheets for Job 71 and 72 as shown in Exhibit 7. During December, Job 71 was completed. Upon completion, the product costs, that's the direct materials, direct labor, and the factory overhead, are totaled. This total is divided by the number of units produced to determine the cost per unit. Thus, the 20 Jazz Series guitars produced as Job 71 cost $512.50. $512.50. That's $10,250 divided by 20 per guitar. After completion, Job 71 is transferred from work in process to finished goods. Job 72 was started in December but was not completed by December 31, 2016. Thus, Job 72 is still part of the work in process on December 31, 2016. As shown in Exhibit 7, the balance of the job cost sheet for Job 72, which is $21,000, is also the December 31, 2016 balance of work in process. Let's talk about the finished goods. The finished goods account is a controlling account for the subsidiary finished goods ledger or stock ledger. Each account in the finished goods ledger contains cost data for the units manufactured, units sold, and units on hand. Exhibit 8 illustrates the finished goods ledger account for Legend Guitars Jazz Series guitars. Here, Exhibit 8 indicates that there were 40 Jazz Series guitars on hand on December 1, 2016. During the month, 20 additional Jazz guitars were completed and transferred to finished goods from the completion of Job 71. In addition, the beginning inventory of 40 Jazz guitars was sold during the month. Now, let's talk about the sales and cost of goods sold. During December, Legend Guitars sold 40 Jazz Series guitars for $850 each, generating a total sales of $34,000. That's $850 times 40 guitars. Exhibit 8 indicates that the cost of these guitars was $500 per guitar, or a total of $20,000. That's $500 times 40 guitars. In a job order cost accounting system, the preparation of a statement of cost of goods manufactured, which was discussed earlier, is not necessary. This is because job order costing uses the perpetual inventory system, and thus the cost of goods sold can be directly determined from the finished goods ledger as illustrated in Exhibit 8. What are period costs? Period costs are used in generating revenue during the current period but are not involved in the manufacturing process. Period costs are recorded as expenses of the current period as either selling or administrative expenses. What's the difference between selling and administrative expenses? Selling expenses are incurred in marketing the product and delivering sold products to customers. Administrative expenses are incurred in managing the company but are not related to the manufacturing or selling functions. During December, Legend Guitars recorded the following selling and administrative expenses. Here's Exhibit 9, which shows you the flow of manufacturing costs for Legend Guitars. In addition, summary details of the following subsidiary ledgers are shown. Materials ledger, the subsidiary ledger for materials, and the job cost sheets, that's the subsidiary ledger for work in process, and the finished goods ledger, and that's the subsidiary ledger for finished goods. Entries in the accounts shown in Exhibit 9 are identified by letters. These letters refer to the journal entries described and illustrated in the chapter. Entries H and J are not shown because they do not involve a flow of manufacturing costs. Here's Exhibit 10, which shows you the income statement of Legend Guitars. Job order costing for decision making. Let's talk about this. A job order cost accounting system accumulates and records costs by jobs. The resulting total and unit product costs can be compared to similar jobs, compared over time, or compared to expected costs. And in this way, a job order cost system can be used by managers for cost evaluation and control. To illustrate, Exhibit 11 here, which shows the comparative data for job cost sheets, shows the direct materials used for jobs 54 and 63 for Legend guitars. The wood used in manufacturing guitars is measured in board feet. Because jobs 54 and 63 produce the same type and number of guitars, the direct materials cost per unit should be about the same. However, the materials cost per guitar for job 54 is $100, while job 63 is at $125. Thus, the materials cost are significantly more for job 63. The job cost sheets shown in Exhibit 11 can be analyzed for possible reasons for the increased materials cost for job 63. Because the materials pricing did not change, that's $10 per board foot, the increased materials cost must be related to wood consumption. Comparing wood consumed for jobs 54 and 63 shows that 400 board feet were used in job 54 to produce 40 guitars. In contrast, job 63 used 500 board feet to produce the same number of guitars. Thus, an investigation should be undertaken to determine the cost of the extra 100 board feet used for job 63. So what could be the possible explanations that could, one is a new employee who was not properly trained, cut the wood for job 63. As a result, there was an excess waste and scrap. Second, the wood used for job 63 was purchased from a new supplier. The wood was of poor quality, which created excessive waste and scrap. Thirdly, the cutting tools needed repair and were not properly maintained. As a result, the wood was miscut, which created excessive waste and scrap. The instructions attached to the job were incorrect. The wood was cut according to the instructions. The incorrect instructions were discovered later in assembly. As a result, the wood had to be recut and the initial cuttings scrapped. Let's talk about the job order cost systems for professional service businesses. A job order cost accounting system may be used for a professional service business. For example, an advertising agency, an attorney, and a physician each provide services to individual customers, clients, or patients. In such cases, the customer, client, or patient can be viewed as a job for which costs are accumulated and reported. The primary product costs for a service business are direct labor and overhead costs. Any materials and supply costs are included as part of the overhead cost. Like a manufacturing business, direct labor and overhead costs of rendering services to clients are accumulated in a work in process account. Work in process is supported by a cost ledger with a job cost sheet for each client. When a job is completed and the client is billed, the costs are transferred to a cost of services account. Cost of services is similar to the cost of merchandise sold account for a merchandising business or the cost of goods sold account for a manufacturing business. A finished goods account and related finished goods ledger are not necessary. This is because the revenues for the services are recorded only after the services are provided. In practice, other considerations unique to service businesses may need to be considered. For example, a service business may bill clients on a weekly or monthly basis rather than when a job is completed. In such cases, a portion of the costs related to each billing is transferred from the work in process account to the cost of services account. A service business may also bill clients for services in advance, which would be accounted for as a deferred revenue until the services are completed. Now, service job order cost serving in a law firm. Law firms typically use jobs or job order costing to track the costs of individual legal cases or client engagements. The costs of each job are accumulated in a job cost sheet, just as in a manufacturing firm. However, because a law firm is a service firm, there are no direct materials costs. The primary cost comes from the direct labor of the professional staff. Law firms like Constanji, Brooks and Smith, a national law firm specializing in employment law and labor relations, uses a job order costing system to track the cost of individual cases. The direct labor costs of the professional staff are determined by multiplying the time that each attorney spends on an individual case by the attorney's hourly billing rate. Now, billing rates vary depending on the rank of the attorney doing the work. In addition, any costs that can be directly attributed to a specific engagement are added to the engagement's job cost sheet. For example, if a case requires the legal team to travel to another city to interview witnesses, the cost of the travel is added to the job cost sheet for that specific client. Indirect costs such as support staff, office supplies, and office rent are accumulated as overhead costs and allocated to individual jobs using an activity base, such as professional service hours.
So we'll continue our discussion on job order costing with the case problem 2-5, which is the determined overhead. And as an assistant cost accountant for Mississippi Industries, you have been assigned to review the activity base for the determined factory overhead rate. Your president, Tony Faber, has expressed concern that the over or under-applied overhead has fluctuated excessively over the years. An analysis of the company's operation and use of the current overhead rate, which is the direct labor cost, has narrowed the possible alternative overhead bases to direct labor cost and machine hours. So for the past 5 years, the following data have been gathered. So for the first problem, we have to calculate the predetermined factory overhead rate for each alternative base, assuming that rates would have been determined by relating the total amount of factory overhead for the past 5 years to the base. So to solve for our first problem, we need to first solve for the predetermined factory rate of the labor cost and the predetermined factory rate for the machine hours. So for our first problem, we'll just have to total the actual overhead for the last 5 years, which is 4,200,000, and divide it with the direct labor cost, the total of direct labor cost for the past 5 years, which is equivalent to 21 million. Then we have the rate of 0.2. We have already discussed earlier that the predetermined factory rate is equivalent to the estimated total factory overhead and divide it with the activity base. For our activity base, it is used to allocate the factory overhead costs, which are the direct labor hours, direct labor costs, and the machine hours. And for the machine hours, predetermined factory rate for the machine hours, we'll just divide the actual overhead for the last 5 years, which is 4,200,000, and divide it with the total machine hours for the last 5 years. And we have a value of 500,000. And divide 4.2 by 500,000, we have a value of the predetermined factory rate for machine hours, which is $8.4 per hour. So for our next problem, for each of the past 5 years, we need to determine the over or under applied overhead based on the two predetermined overhead rates for developed in part 1. So this would be our answer for our second question. So to determine the over or under applied overhead for each year, we need to multiply the predetermined factory overhead, which we have solved earlier for the direct labor labor cost and for the factory overhead, and then base and compare that result to the actual overhead for that year. So first, we'll go to the direct labor cost. We just multiply that value per year by our predetermined overhead, which was 0.2, and we have here the values, and we will just subtract that with the actual overhead for that year, and we have the values for the over under applied overhead per year for our direct labor cost. And then for our machine hours, we'll just do the same steps. So since we already have the value for our predetermined factory overhead, which was solved earlier, we'll just multiply it with the machine hours per year. And we have the values here, and we'll just subtract it with the values for our actual overhead, which will result to the values here. And then we have the third problem. Which predetermined overhead rate would you recommend? Discuss the basis for your recommendation. So our answer in this problem will be based on this table. So since, as you can see, the values for the over under applied overhead for the machine hours is much lesser than the values for our direct labor cost. So this suggests that machine hours might provide a better representation of the overhead costs incurred in production and may be a better base for the predetermined overhead rate. So this is all based on our figure here, that the values for the factory overhead is much lower than our values for the direct labor cost.